A very good morning from Khandwala Securities Limited and welcome to Monday's trading action at Dalal Street dated April 11th, 2022. With RBI's policy decision in the rear mirror, the street now braces for start of the earnings season which should at least give us some solid trend. The Q4 earnings season is quite significant as is on backdrop of the scorching inflation conditions which should ideally determine just how well or poorly companies are able to deal with inflation. Well, the theme of the day revolves around TCS, which will officially set afire the ceremonial status pistol for the fourth quarter corporate earnings season. The street will spy with one big eye on the management commentary, primarily on future outlook, attrition rates, and deal momentum. The street largely expects demand outlook to remain healthy, but that said, moderation in sequential revenue growth of IT companies quite likely amidst pressure on margin from elevated wage increases. The last street could also trade volatile as is a truncated week with Thursday and Friday being trading holidays on account of Dr. Babasaheb Ambedkar, Mahavir Jayanti and Good Friday respectively. Now before we get into detail, here is the preferred trade on Nifty and Bank Nifty. Nifty current market price 17,784, buy between 17,650 to 17,700 zone, strict stop at 17,531, targets 18,001 and then at 18,257, aggressive targets at 18,605 zone. Bank Nifty current market price 37,752, buy at current market price, strict stop at 36,101, targets 38,765 and then at 39,425, aggressive targets at 40,000 zone. Meanwhile, the biggest headwind commanding attention would be the big leap in the US Treasury bond yields, which is seen spooking sentiments across globe. The 10-year UST bond yields has spiked to 2.704%, highest level since early 2019. Blame it to hawkish Fed minutes. Minutes from the last March FOMC meeting showed many Fed officials prefer to reduce balance sheet by $95 billion per month. Fed officials also preferred a 50 basis point increase in Fed funds rate instead of a 25 basis point hike. That brings us to our call of the day, which suggests a rough session on cards as the US Treasury yields have inverted. The short term bond yields exceed those of long term bond yields. It means investors are worried about the economy's long term prospects. Our chart of the day is bullish on stocks like Hindalco, Balrampur Chini, Tata Steel, Steel Authority of India, Concor, and Vodafone Idea on any corrective declines with an inter-month perspective. The Nifty options data for April series suggests Nifty is likely to be in a wide trading range of 17,000 to 19,000 zone. Maximum call open interest at 18,000 followed by 19,000 strike price. So the 19,000 mark would be Nifty's crucial resistance zone. Maximum put open interest stands at 17,500 levels followed by 16,500 levels. Call writing was seen at 19,000 and then at 18,200 strike price, while there was meaningful put writing at 16,500 and then at 18,000 strike price. Technically speaking, Nifty's intraday support seen only at 17,689 mark with Nifty's hurdles only at 18,115 mark. For the day, Nifty likely to trade choppy with Nifty's range likely to be 17,727 to 17,927 zone. Bank Nifty's biggest make or break support seen at 37,301 mark. Expect waterfall of selling only below 37,301 mark. Hurdle seen at 38,283 mark. Confirmation of strength only about 38,283 mark. In stock specific news, Tata Motors, Jaguar Land Rover continued to face the risk of global semiconductor shortage as its retail sales fell sharply by 36% year on year in Q4 FY22. Veranda Learning Solutions, the company will make its debut on the bourses on April 11th. That's all we have for now. For any queries, do contact us at 022 4076 7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.